Michael Burry is the infamous investor who predicted and shorted the housing market during the 2008 crash. He's incredibly good at shorting stocks and markets. What exactly is shorting? Good question. The concept can be a little confusing, but I'll try to give you a quick crash course. Usually, people invest in companies or assets they think will do well. For example, they buy shares in a company and wait for the share price to go up. This is the standard investing model, which Burry is great at too. But he's also a master of doing the opposite. He buys what are called put contracts in assets he thinks will perform poorly. When the price of those assets goes down, he makes money. A put contract is a type of option contract where you have the right or the option to sell shares, bonds, and other asset types at a certain price stipulated in the contract. So if the actual price of the underlying asset goes down and you have a contract that gives you the ability to sell at a certain higher price, well, that means you make money. One of the companies Michael Burry is convinced will lose value is kind of surprising. If you couldn't guess from the title of today's video, it's Tesla. Michael has been pretty vocal about Tesla's impending doom over the years, but his actions speak even louder. His bet against Tesla currently sits at around $538 million. Today we're going to hop off the Tesla bandwagon for a minute and look at some reasons why Michael Burry might be onto something with his bet against the company. Welcome back to Coach Stack, your secret weapon for improving yourself through business, investing, and personal growth. Be sure to hit that subscribe button and ring the notification bell so you don't miss out on our next videos. Alright, let's get our shorting hats on. Tesla's value is speculative. Tesla is worth a lot. To prove it, all we need to do is calculate its market capitalization. Let's see. Tesla has 990 million outstanding shares. Each one is worth around $752. Shares times value. Its market cap is around $745 billion. This is a massive amount of value. For reference, Tesla's market cap is more than Netflix's, Disney's, and Visa's. Still not impressed? Tesla's market cap is so huge that it's bigger than the market caps of the 9 next biggest auto manufacturers combined. That is an insane statistic. According to Michael Burry, it's also an impossible statistic. To see if he's onto something here, let's see if we can make sense of Tesla's valuation. For manufacturers like Tesla, one of the tools some investors may use is calculating a company's market cap per unit sold. It's a statistic for getting a sense of how much value investors place on each product a company produces. Let's start with a few major auto manufacturers and work our way up to Tesla. In 2020, Ford sold roughly 10 million cars and had a market cap of around $60 billion. That's a market cap per unit sold of $6,000. In the same year, Toyota also sold around 10 million cars but had a higher market cap valued at around $200 billion. That's $20,000 per car sold. Now it's time for Tesla. Get your telescope ready because this graph is about to shoot up. In 2020, Tesla only sold 500,000 cars. Despite this, it managed to hit a market cap around $700 billion. That means that in 2020, investors thought each car that Tesla sold was worth $1.4 million. That's 70,000% more than Toyota's value per car sold. Now, let's take a second and think about what this actually means. Is it likely that a Tesla is worth more than its asking price? Sure. There are tons of value adds that come with owning a Tesla, like saving money on gas, helping the environment, the self-driving capability, and many more. Is it likely that a Tesla is worth 70 Toyotas or a New York City apartment? Michael Burry clearly doesn't think so. It's worth mentioning that Tesla bulls would never use a method like this to think about the valuation, since Tesla is much more than a car company. Tesla is sometimes referred to as a technology company who happens to sell cars. It's no secret that Tesla is innovating rapidly in solar technology, AI-powered self-driving, battery technology, and more. But this is what Michael Burry would perhaps call highly speculative value. Elon Musk is unpredictable. Billionaire CEOs tend to be pretty boring, at least in public. That probably isn't because they really are boring people. It's most likely because they think they need to be. CEOs and founders are the figureheads of their companies. Everything they do and say has the potential to impact everything from profits to public opinion. If a CEO or executive says the wrong thing, all you can really do is hire a PR firm and hope for the best. Just being boring seems to be way more reliable and safe. Elon doesn't really subscribe to that idea though. He seems to love jokes, memes, controversial statements, and most of all, tweets that should probably have stayed thoughts. Sure, you could point to his insane net worth or the success of his many multi-million-dollar companies as evidence that his unpredictability isn't a big deal, but one could make the case that it's had some negative effects. Exhibit A, the infamous Bitcoin tweet. In early 2021, Elon decided to make an announcement. He logged into Twitter, typed a quick message, and pressed enter. Almost instantly, Tesla's share price dropped by 17%, costing the company an estimated $340 million. What was the announcement? It was a message letting people know that Tesla wouldn't be accepting Bitcoin any longer due to the currency's environmental impact. Now, most CEOs would have sat down with their PR teams, accountants, and lawyers to draft a statement to do the minimum amount of damage to the company. Not Elon. Exhibit B, the even more infamous going private tweet. You've probably heard this story before, but it's still definitely worth mentioning. Back in 2019, Elon, probably bored, decided to play a joke on his 60 million Twitter followers. He decided to write a tweet informing the world that he had secured the funding to take Tesla private at $420 per share. The joke turned out to be pretty costly. Here's a full list of punishments, expenses, and consequences. Elon was pulled from his position as Tesla chairman. He had to pay a $20 million fine to the SEC. Tesla also had to pay a $20 million fine to the SEC. Tesla had to appoint 2 new independent directors to the company's board. Elon was forced to sign a contract saying that his future tweets would be reviewed by Tesla management. Was it worth it? Now, I'm not mentioning these examples just because they're funny. They also highlight another reason why Tesla can be seen as a risky investment. Any company that has a CEO as unpredictable as Elon is susceptible to some pretty wild fluctuations. Tesla won't be on its own for long. The last thing I want to mention today is pretty straightforward. A lot of Tesla's valuation comes from the fact that the company produces electric cars, and cars that have the potential to be fully self-driving. Looking at just how high Tesla's valuation is, it's easy to get the impression that the company is in a league of its own when it comes to both the electric and self-driving industries. But one potential issue is the competition starting to take electric vehicles seriously, finally. Yes, a lot of major car manufacturers are playing catch-up when it comes to the technologies involved. Most of them have the resources, brainpower, and production capabilities to make up the ground, though. The only question is how long. Is Tesla way too far in front? Will other manufacturers potentially need to license technology from Tesla? Clearly, Burry is not convinced that Tesla is untouchable. As a short investor, Michael Burry is trying to look into the future to find companies that are overvalued. When he looks into Tesla's future, he sees a much more crowded market. Today, we've tried to look at Tesla through his eyes. That's all for today's video. If you haven't already, make sure you hit the subscribe button below to make sure you don't miss out on the next Coach Stack video. Thanks for watching and see you next time.